Last week I've been heavily working on a strategy for gold 30-minute chart using one of our TradingView strategy scripts, and I came up with a highly profitable strategy optimization. This strategy is generally looking for breakouts out of a set range and will enter on a cross on the stochastic RSI indicator. As always, I also added a few filters so the strategy is even better and backtested on the last 4 years of price data. And the results? Well, they were amazing. 1300% net profit, 65% win rate, with only 22% maximum drawdown. Those results were achieved with a 0.5 USD per contract commission and 150 tick slippage. And the best part is that you can turn this strategy into a trading bot using this TradingView strategy script. In this video I will explain the full strategy with the indicators I used, the entry and exit rules. I will also show you the optimization settings and the backtest results. Keep in mind, this is not a beginner strategy, it has many rules with multiple take profit levels, with complex trade management and position sizing. But once you master it, strategies like this can be a game changer. Hello everyone and welcome to TradeSmart, where we test and code objective, rules-based strategies that can be turned into trading bots. If you are new here and want to see more content like this, don't forget to like, subscribe and turn on the notification bell. Also comment below what are you trading the most, so I know what strategies should I bring you next. Are you trading forex, stocks, cryptocurrencies, metals or indices? Let me know. Without wasting any time, let's get started. Okay, for this strategy first open up TradingView and set up the gold USD 30-minute chart. Once you got that, let's add our indicators. For this strategy we will use a lot of indicators and we will also change their settings, so pay close attention. First let's add our trend filter, which is the smoothed moving average. Add this one to your chart. Then our stop loss and take profit indicator, which is the NNFX ATR. This one. After that our entry signal indicator, the stochastic RSI. This one. After that we will use a target price limiter, I will explain later, and that will be a 50 length EMA, so type in EMA. And add the moving average exponential. For exits we will also use another exit signal indicator, which is the squeeze momentum. This one by Lazy Bear. Then we will use a Chanda momentum oscillator with a Vidya moving average. So type in Chanda momentum, click on this one, and type in Vidya. And add the variable index dynamic average by Everget. Previously I did a best baseline indicator video, and the Vidya became one of the best. And the Vidya, besides the SMMA, became one of the best ones. And finally, we will also need a volume/volatility filter, which will be the Wadatar explosion. Click on this one. Well, now we have all of the indicators on the chart, but as I said, I spent a week optimizing this strategy, so we need to change a few settings. Let's start off with moving the Vidya moving average, which is this green or red line, onto the Chanda momentum oscillator. To do that, just click on it and start pulling it down until you reach the Chanda Mo. Then release it. This way the Vidya will be displayed on the Chanda momentum oscillator. So now open up its settings, change its length to 70 and change its source to the Chanda Mo. This way the Vidya moving average will move according to the Chanda momentum oscillator. Now open up the Chanda momentum and change its length to 40. Now let's go over the indicators one by one. For our baseline indicator, the SMMA, we need to change its length to 200. I also changed its color to white, so it's easier to see. For a stop loss and take profit indicator, the NNFX ATR, you need to set the X value, which is its period, to 120, the take profit value to 6, and the stop loss value to 4. After that, go to the styles tab and uncheck the sell TP, the sell SL, and the main ATR. And finally, I changed the buy TP color to green and the buy SL color to red. You can also change the line styles to step line, so it will be easier to see where to put your stop losses and take profits. The next one is our target price limiter, which is the 50 length EMA. So make sure its length is set to 50, and you can color however you like. I left it blue. Now moving on to our main entry signal indicator, which is the stochastic RSI. We need to change the K length to 10 and the D length to 7, the RSI length to 160 and the stochastic length to 10. After that, go to the Styles tab, uncheck the middle band, the lower band and the background and change the upper band value to 70. This will be used as a limit for long entries. We have already set up our ChandeMO and the Vidya, so move down and we are at the WADA-ATAR. Change its sensitivity to 250, the fast EMA to 10, the slow EMA to 35, the BB channel length to 15 and the BB STDEV multiplier to 3. Then go to the Styles tab and I modify the explosion line and the dead zone line. I change the explosion line to white and the dead zone line to blue, so it will be easier to see. And I also change the line styles to step line. And finally, our secondary exit signal indicator, the squeeze momentum. With the squeeze momentum, you only need to change the KC length, and that should be set to 65. In the Styles tab, I untick the plotting option too. And with that, you have fully set up your strategy. I know these are a lot of indicators, but for a complex, no-nonsense Forex or NNFX-based strategy, you will need to use at least 5 indicators. And now, let's see the rules of the strategy. As I said, to create this strategy, I used one of our premium scripts, which is the 1 trade a day script, and I will leave it on the chart so you will see long entry and long exit signals, but don't worry about them. Okay, here we have a valid long entry signal. For a valid long entry, first of all, the price needs to break and close above the 9 AM to 10 AM range. Here on the bottom you can see the 9 AM range starts here and ends here. To determine the range of the 9 AM to 10 AM, you just need to take a look on the candles. Where was the lowest point during these 3 candles? It was right here. And what was the highest price out of these 3 candles? It was this level. From now on, we are looking for a breakout of this range. Once we get the breakout, we can move on to the second rule. Keep in mind that a valid breakout is when a candle breaks and closes above this range. And the breakout happened right on this candle. You can see a blue cross above the candle. That's only because our script prints X signals when the breakout occurs. So as the breakout occurred, we can move on to the second rule. The second rule is that the stochastic RSI needs to cross up under the 70 level, 3 candles before the breakout or anywhere after the breakout until the next 9 to 10 AM range. It might sound complicated at first, but it really isn't. Let me explain. So we got our breakout right here. And we need to see a valid stochastic RSI cross anywhere between the last 3 candles. So this is 1, 2 and 3. Up until the next 9 to 10 AM range, which is right on this candle. Let's open up the stochastic RSI and check if we get a valid cross up. So after the breakout, the stochastic RSI is already bullish. The blue line has already crossed above the orange line. But when did the cross up occur? If we count back 3 candles and we see a cross up under the 70 level, then it's a valid cross up. Let's see. 1, 2 and 3. And the cross up happened way earlier, back here, so this is not a valid entry yet. As time goes on, we get a cross down, but we need a cross up, which occurs right here. And if I zoom in, we can clearly see that right before the cross up, both of the stochastic RSI lines were below the 70 level, which is this dotted line. So this is a very stochastic cross up, which means we can move on to the third rule. The third rule says that the signal candle needs to close above the 200 length SMMA. The SMMA is the white line right here. And on the potential signal candle, the price clearly closed above the 200 length SMMA. Let's move on to the fourth rule. The fourth rule says that the candle momentum is above the candle momentum based Vidya. Let's open up our candle momentum oscillator. The blue line is the candle momentum line, and this red or green line is our Vidya. On the entry signal candle, the blue line was above the Vidya, so this rule is also met. Moving on, we have only 2 rules left for a valid long entry, and the fifth rule is that the WADA-ATAR is above both the dead zone line and the explosion line. Here's our watt-hour explosion indicator, and on the potential entry signal candle, it is clear that the watt-hour, which are these bars, is above the white and the blue line, which are our explosion line and our dead zone line. And finally, there's one last, a bit strange rule that you probably haven't seen anywhere else, and that is that the 50 EMA should not be between the entry price level and the first take profit level. What does that mean? Our first take profit level is a 50% take profit at a 1 to 1.5 risk to reward ratio level. So let's say this is a very long entry, then our stop loss would be here, and our take profit level would be somewhere around here. Do we have the 50 length EMA between these two levels? Well, we don't, because the 50 EMA is this blue line right here. So the sixth and final rule is also met, which means that this is indeed a very long entry signal. Now let's go over the exit rules. First of all, we will exit the position if a 4 times ATR distance stop loss gets hit. For the stop loss, we use the NNFX ATR indicator, which will print our stop losses right below the candles. In this case, the stop loss will be here, so let's place it there. The second exit rule says we will exit 50% of the position at a 1 to 1.5 risk to reward ratio level will be at the upper NNFX ATR line, which is this green line. And here you can see it is a 1 to 1.5 risk to reward ratio. And we will exit 50% of the position if that level gets hit. And that level got hit right here. And you can also see the long exit half printed above by our script. The third rule is that we will exit a position if the price closes below the 4 times ATR trailing stop loss. So the initial 4 times ATR stop loss is not just a static stop loss which will stay there until the position is fully closed. We will be updating it on each new candle. So after this candle closed, we moved our stop loss here. After this closed, we moved it here. Then we moved it here and here. But on the next candle, the ATR stop loss moves lower. But as this is a trailing stop loss, we will not move our stop loss lower. We will keep it at the latest and highest level until we get an even higher level stop loss. On this candle, it moved slightly higher. On this candle, a bit higher again. Here, a bit higher again, and again, and again. So we are continuously moving our stop loss higher, but never lower. And the final exit rule is that we will exit the full position if the squeeze momentum turns from green to red. On the bottom, we set up our squeeze momentum. It will be printing green and red bars. So if you are in a long position and you see something like this, a green bar turns into a red bar, this is an exit signal. Now let's see how this trade plays out. So we entered here, we hit our first take profit level right there, and now we are waiting for the other conditions to be met. The stop loss is moving higher and higher. The squeeze momentum was red at first, but then it turned to green. So we are still waiting a green to red switch for a valid exit. Because first our trailing stop loss gets hit. Keep in mind that this trailing stop loss is not your usual trailing stop loss. It is only triggered if the price not only breaks below, but closes below the trailing stop loss. For example, on this candle, it is clear that it was hit, but our script only exited on this candle's open, and that's because the candle after the first hit was the one which closed below the stop loss level. And this means that we exited the position right there at that level, because the trailing stop loss gets triggered. Now, if we would have exited with the squeeze momentum, the position close would happen right after this candle's close, right there. That's why with this strategy we are using multiple exit options to get the best outcome. If you are building a strategy, I recommend you to do the same. You need to use a strict stop loss. A trailing stop loss is also recommended. A partial exiting option, which can be anywhere from a 25% exit to 75% exit at a set level, is also recommended. And the final exit signal indicator, which in this case, a squeeze momentum indicator. So that's are the rules for long entries. But what about shorts? With this strategy, we are not going to enter into short positions, as this is a long only optimization. So now, the most important part, let's see the backtest results. For the backtest, I've set up a $100,000 initial capital. The order size is set to 100% of the equity, but in reality, we are using a 5% risk per trade position sizing. which means that on each trade we risk to lose 5% of our capital if the stop loss gets hit right away. The first commission is a 0.5 USD per contract, and the second commission, which is the slippage, is set to 150 ticks. For our Patreon supporters who have access to the script, here are the settings. I've also posted this strategy optimization into our Discord. This will be the 49th optimization we shared. And here are the backtest results. For the backtest, I used the last 4 years of price data, starting from the 1st of March 2020 and ending on the 1st of March 2024. During this period, the strategy took only 211 trades, but those trades made 1,300% net profit with a 65% win rate, a 2.32 profit factor, and only 22% maximum drawdown. And just look at that equity curve. It looks exponential because the position sizing is set to reinvesting or compounding. If we take a look on the buy and hold equity curve, you can see it's all the way down at the bottom. So this strategy easily outperforms the gold buy and hold option. For those who are interested, here is the detailed performance summary. But how did this script perform outside of the optimization range? Let's see the last 3 months of results. I will set the start date to 2024, 1st of March, and the end date to 2024, to the 1st of June. In these last 3 months, the script took 17 trades, generated 48% net profit, with a 76% win rate, a 4.39 profit factor, and only a 10% maximum drawdown. Here down, you can see the buy and hold equity curve, and our strategy easily tripled that profit. Going back to the main optimization time interval, 211 trades might seem a bit low, but hear me out. First of all, we are using a trailing stop loss, which can make the strategy stay in the same trade for days, that can cause the strategy to not enter into other valid positions until the first trade is open. Second, and I said this before, on every one asset there are only a set number of good trades that you can take with a strategy. So what I'm trying to say is that you can't force a strategy to enter into more trades when there isn't a good setup. So 211 trades, in my opinion, is decent. That means that throughout these 4 years, you would have at least 2 to 5 trades each month. Let's see a few trade examples that the script took. Here we have a great 9 to 10 AM range, and right after the 10 AM candle, we get a breakout. Just after that, we get a perfect stochastic RSI cross up under the 70 level, and the script entered into a long position. The first take profit got hit right there, and the trailing stop loss is moving up constantly. Finally, a candle crossed and closed below it right there, so the script exited the position. Here we have another entry. This is the 9 to 10 AM range. The script entered. The first take profit was hit right there. And then the trailing stop loss closed out the full position right there. Well, if you like this strategy, you can use it manually, or you can get access to the script and automate it through our Patreon. Link is down in the description. And that wraps up today's video. If you want to try out or automate this strategy script and turn it into a trading bot, check out our Patreon and become a Smart Trader tier member. Just click on the pop-up in the top right corner or find the link down in the description. In the Smart Trader tier, you will get access to all of our premium scripts, including this one, and to 49 optimizations currently. Besides that, you will also get access to a few simple open source scripts, so you can start coding your own strategies, and to our 350 coin crypto research spreadsheet that we use for investing in cryptocurrencies. As always, thank you all for watching. Let me know if you like videos like this with a like or dislike, and subscribe if you haven't already. If you want to see another strategy created with one of our premium TradingView scripts, check out this playlist. Or if you want to find out which is the best entry signal indicator on TradingView, check out this video. Check out the description for discounts and rebates for crypto trading platforms, trading bot automation services, and more. Have an amazing day, and until next time, trade smart.